Hey everyone, AI stocks have been absolutely soaring, and the two stocks I'm going to compare in this video have been soaring as well. I'm going to compare Palantir Technologies and Supermicro Computer to answer which one I think is the better stock to buy now. I'm going to compare them on revenue, on growth, on cash flow, on shareholder dilution, valuation, forward prospects, bring that all together and come up with the conclusion which one I think is the better AI stock to buy now. So let's jump into this analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, let's start with revenue. And trailing 12-month revenue, Supermicro Computer has seen its revenue jump from a little over $3 billion in 2020 all the way up to $9.253 billion in the most recent trailing 12 months. And in its most recent quarter, revenue jumped by 103%. Palantir Technologies, meanwhile, has been growing nicely, although not to the level of Supermicro Computer. In its most recent quarter, Palantir delivered revenue growth as well, and expectations are for Palantir to continue growing. Revenue of $2.225 billion in Palantir's most recent trailing 12-month period. But let's take a look at the total addressable market opportunity for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. So now that you have an idea of the scale of this AI opportunity, you can understand why the prospects for Palantir and Supermicro Computer are so excellent, why investors are so enthusiastic about these two stocks in particular, and why investors are excited about the AI industry overall. The next metric I wanted to compare these two on is the operating profit margin over the trailing 12 months. You can see Supermicro Computer relatively flat at 9.4%, Palantir making significant progress upward, but still below Supermicro Computer at an operating profit margin of 5.39%. They're both doing well. I would say Palantir, I wouldn't be surprised if in the next 4 quarters, if Palantir surpasses Supermicro Computer in the operating profit margin metric. Looking forward, for 2024, investors expect Palantir to deliver 19.5% revenue growth with 18.1% earnings per share growth. For 2025, investors expect Palantir to deliver 20.4% revenue growth and 18.2% earnings per share growth. Palantir, in its expectations, is expecting to deliver increasing rates of growth. Even though it's slight, you can see the rate of growth growing from 19.5 to 20.4, from 18.1 to 18.2. So not only is the growth rate solid, but the growth rate is increasing. That second derivative is something I talk about frequently. Very few companies demonstrate that level of growth where top and bottom line is growing at an increasing rate. You can see Supermicro Computer is demonstrating the opposite of that. It's growing at a decreasing rate. Investors expect Supermicro Computer to grow at 84% in the year that ends in June 2024, with earnings per share to grow by 67%. I hope you noticed that the fiscal year is different for Supermicro Computer compared to Palantir. They're allowed to do that. Companies are allowed to have fiscal years that are different than the calendar year, although some companies will have fiscal years that are equal to the calendar year. Supermicrocomputer is not one of those. So investors expect Supermicrocomputer to deliver 30% revenue growth in its fiscal year 2024 with 29.7% earnings per share growth. And finally, in 2025, they expect 6.5% revenue growth with 17.3% earnings per share growth. And you notice decelerating revenue growth, 82, 30, 6.5. The rate of growth decreasing. The same with earnings per share, 67, 29, 17. The rate of growth decreasing on both the top and bottom line. The opposite of Palantir, where the rate of growth is increasing on the top and bottom line, although the absolute level of growth rates are more favorable for Supermicrocomputer, the level of growth is better for Supermicrocomputer. The next thing I wanted to compare is cash flow from operations to sales. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. So now that you understand the value of that metric, look at Palantir at 32.01%, and the rate of improvement in this metric is phenomenal for Palantir. Supermicrocomputer at negative 1.47%, Palantir demonstrating the clear advantage in this metric. And finally, I wanted to look at valuation. Palantir is trading at a forward price to earnings of 61.36, while Supermicrocomputer is trading at a valuation forward PE of 24.19. Now, I'll highlight that coming into 2024, I had rated Palantir and Supermicrocomputer stocks as a buy. I still rate both of them as a buy, and this comparison is especially tough because I do believe Palantir deserves a premium valuation over Supermicrocomputer. I think Palantir is the better company, the better profit prospects, the better business model. I think longer term it has better prospects. However, The valuation premium of more than 2 times as expensive as Supermicrocomputer according to the forward PE, I think is a little too much. So if I had to pick one of these two AI stocks to buy today, I would pick Supermicrocomputer. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.